New Zealand inflation figures for the December quarter were a touch stronger than market expectations, as well as Reserve Bank forecasts. Annual inflation came in at 1.3%, which is the strongest we've seen since mid-2014, and also the first time in about 2 years that we've seen inflation increase above 1%, remembering that the Reserve Bank's target band for inflation is between 1% and 3%. At 1.3%, inflation is still relatively low in the scheme of things. However, the fact that it's back in the Reserve Bank's band and the fact that it is on the increase does suggest that from here, interest rates will rise. As far as the OCR goes, it might not be something that happens this year. It could be a story for 2018, but the next move will almost certainly be upwards. Longer term rates will continue to be influenced more by what's happening overseas, and in this regard, you're definitely seeing interest rates drift higher. I think that'll mean that the cost of borrowing for most New Zealanders, in terms of households and corporates, will increase. Another milestone that's seen a few headlines this week has been the Dow Jones share index in the US pushed through 20,000 for the first time. This has been driven by a number of factors. We've seen better economic data in the United States, we've had a reasonably solid reporting season, and obviously the election of Donald Trump as president has caused a bit of optimism on the front of tax cuts, deregulation, those sorts of issues. The Dow's put on about 10% since the election last year, and it's had a pretty good start to the year. This comes in contrast with the New Zealand market, which is still down about 6% from its peak that it saw in September, although the local market has had a pretty good start to 2017, with the NZX 50 rising 3.5% so far in January.